Well, one of the things I was thinking was interesting as we're talking about all of this volatility inside of insurance is a lot of people view insurance companies as these big evil companies, right? Like you're just there. I had a friend call me. He's not one of my customers because he lives in the Midwest. He called me just this morning. He's like, "Hey, are termites covered?" And I was like, "Termites aren't going to be covered on your home insurance." He's like, "What about rot?" I was like, "Rot's not going to be covered on your insurance." Yeah, stinking insurance companies never pay out anything. I was like, "Yeah, if your house burns down, it'll be fine though, right?" Right. So like that concept is there that insurance companies are just not going to cover anything. They're just they're just taking your money. But realistically, you mentioned Lloyd's of London, going back to ships, right? Like, how do you see how the role that insurance companies play in economic stability?
I think that's a really good question. I think back to your point of the termites and the rot. Like, insurance is not there to basically replace your responsibility in maintaining your property. Like, that's not what insurance is. Mm-hmm. You gotta make sure you take care of that stuff. It's there for the sudden and accidental, the things that the risks that, stuff happens, right? And to protect your assets and to allow you to trade, to be in business, because if I'm trading with you, I don't want to do a contract with you if I don't know that you have the stability that you're going to be around for a long time. And one of the ways that we do that is to say, hey, give me a certificate of insurance so I know that you're protected for something that might go wrong, or that I know you're probably going to be in business if your building burns down, whatever business might be. I think about this. There's a restaurant not too far from our house. It's down in like the Mill Creek. I think it's probably technically in Everett, but it's the Mill Creek area. It burned down twice. And it's still a going concern. Like, it's still in business.
Right.
It would not be in business after the first fire.
Yep.
Let alone the second fire. Maybe the guy's got deep pockets and he could rebuild. But is he going to be able to rebuild twice? Probably not. It's in business because it has insurance, right? So I'm a big insurance nerd or whatever because I'm in the business, and I think there's, this probably overstates it, but I think there's actually sort of this noble, virtuous thing that we're doing. It's what keeps the world going around. It allows someone to buy a home. And if you don't have insurance, you're probably not going to buy a home. You think a bank's going to loan you $1 million for a loan to buy this big, beautiful home? Probably not, right? Yeah. Unless they know you've got a piece of paper that says, if this thing burns to the ground, my loan's going to be okay. I'm going to be able to get repaid. So I think that's, at the core of it.
Yeah, I tell people often, I was like, insurance really is what allows you to have a first world country.
Yeah, I think that's a good way to put it. Yeah.
Because to your point, right? Like, if your house burns down, like, even if you go, hey, we're just going to save up, we're going to buy a piece of property, and then we're going to build a house in cash as we go, and we never use a loan, and so I've built this house. It's like, okay, great. And then it burns down, right? And then, like, to your point, like, do you have the deep pockets to build it again? Like, there's probably a few people that do, but most people are not going to be able to afford to rebuild a house when it burns down, or you get in a car accident. Not only do you lose your car, but now you're being sued because the other guy can't work. And now are you going to be able to provide for the other guy's family as well as your own family because it was your fault? Those are the things you can work your whole life to build your life and your lifestyle and financial security for your family in one event.
Seconds.
Yep. Just split second. That's what insurance does, right? Like, that's what insurance, the whole concept of insurance is to protect you from that moment.
I think about, we do commercial, but we also do probably 20-25% of our business is personal lines. And a lot of times when we're talking about the businesses and are they going to be able to maintain and keep going and cover the losses or what have you. But back to even that demographic thing we talked about, there are, I forget the stat, but I remember this is probably 5 years ago. They said over the next 15 years, 10,000 people per day are going to retire.
Wow.
That's an insane number, right?
Yeah.
But that's the math, right? And a lot of people, they have a net worth, a retirement nest egg, whatever that is. Sometimes it's they own a small apartment building. Sometimes it's their 401k. the cash they have, et cetera. But they're saving to be able to retire. And in an instant, if you're not protecting something that what you've built, and a lot of times from a personalized standpoint, that might be your house.
Right.
It might be the apartment building that you built with your buddies. If you don't have coverage for that, it might be, I own a 12-unit apartment building and someone tripped down the stairs and broke their neck because there was, something wrong with the edge of the step. If you don't have a umbrella policy to take care of that, if you don't have, let's say there's a massive earthquake, and sadly for a lot of people, they really don't have enough to retire on.
Yeah.
But some that do, I forget the exact stat, but a big percentage of their nest egg and what they're going to retire on is their home, right? So especially in Western Washington, you've got all these homes and the home values are increasing. And let's say your net worth is $1 million to $2 million. It's possible that half or over half of it is in the equity in your house.
Yeah.
And so if you don't have that protected correctly, whether it's from a fire, which most people have, or let's say, God forbid, there's a massive, not talking about like 5.8 earthquake, but let's say there's the 9.3 and the thing comes off the foundation, you were planning to retire next year and you just had enough. Like you didn't have margin to have to cover $300,000, $400,000, $500,000 for an earthquake loss. Like that's a big deal, but people don't, back to your kind of point, people don't think about it that way. They think about it as, they all have a story of the termites weren't covered. So what a terrible
What do I pay all this insurance for anyways?
Yeah, exactly. Exactly.
Yep. No, and that's true. Like the earthquake, I think like there's things you can control, right? Is like you can control how you drive. You can do rest control and things like that. Earthquake's something you can't control. Yeah. It's going to happen.
Yeah.
They say the geologists say, hey, we're overdue for the big one. And what that means is it should have happened in the last 100 years or it will happen in the next 100 years. So we really don't know.
Right.
At some point it's going to happen and it's going to be a significant and massive impact to
It'll
property
change
damage.
Some people's lives, like in a big
sure.
way.
Yeah, for sure. And so, but how many people carry earthquake insurance?
I heard it was 20% in Western Washington. I don't think it's that high.
Yeah, I don't think so either.
I don't think it's that high. I carry it, and I know some people say, well, the deductible is too high. Well, again, if your margin, I just think about this, the context of retirement. I have a whole nother story if we can get into it, but maybe not. People don't plan for it. And if you have zero margin, like I want to retire in 2027, and you barely have enough to do it, you have a loss, and it's a big loss, you're going to lose it. So even though the deductible might be high, and there are some products out there for deductible buy down for earthquake that are coming out, which I think that's pretty interesting. But if you think about, hey, I've got $1 million in equity, and I could spend over the next 2 years, because my plan is to sell my home and move to Arizona and buy a cheaper house or wherever else, you can insure that $1 million of equity for a percentage of that $1 million. Right. It may not happen, but if it does, now your million, maybe it's 500,000 now because you have this damaged home that you've got to repair before you can sell it. I mean, it's...
Yeah, I was just thinking about it. Like people don't... When you talk about like your equity, right? And you think about like, I have $1 million sitting, I think people think I have my house sitting here, but
it's not like real, right?
Right. Yeah. But if I had $1 million, I would not just like, if I had $1 million in cash, I wouldn't just be like, oh, it'll be fine.
Let's leave it on the sidewalk.
Yeah, it'll just be here. Yeah, nothing will happen. You put it in a bank.
Yeah.
Right?
Yeah.
Like you want some security, you want safety around it.
Yeah.
And you understand that there might be some fees that the bank is going to charge you, but they're keeping your money safe for you.
And that's the downside. You might lose that fee.
Yeah.
But the upside is if something bad happens, I've lost that fee, but I've kept what I really am trying to.
Right. I kept the bulk of my money.
Yeah.
It didn't just
and I don't think
disappear.
people think that way.
No.
Even with liability, especially because liability is even more abstract.